Okay, last week I said that last week's video would be my last one for the year, but here I find myself on the last day of the year. Most of the family has left from their Christmas visiting. So I do have a little bit of time, and I thought I'd put together a video about what we can expect from an economic or investment perspective in 2025. The numbers are pretty much reported for the year here. And if I look at Canada's economy, we did have quite a ride in 2024. We had inflation down, we had employment up, interest rates finally started to come down. So I want to look at what we can expect for 2025. I want to sort of break it down in plain language and see what's next. I want to cover jobs, inflation, and even those U.S. trade threats that we're hearing so much about. So let me kick things off with inflation. Finally, Canada got inflation under control in 2024. We saw the annual rate drop below 2%. Hit that mark back in August. It's been hovering around there ever since. The lowest month that we saw during the year was September, when we saw inflation at 1.6%. And this, of course, is all thanks to those earlier interest rate hikes that are kicking in and doing their thing now. I want to talk more about those in just a minute or two here. Here is a look at the 3-year chart, just so we can sort of put this past year into perspective. Now, all this said, housing has continued to be a troublemaker. Property taxes, rent, mortgage costs, which make up about 40% of inflation by the end of the year. So those weren't good. Now, I did want to take a quick look at the CPI trim numbers as well, because you could argue that they are more important than the headline numbers that we all see. The CPI trim numbers, they are a modified version of CPI. And what they do is they exclude the top 20% and the bottom 20% of price changes. And the idea here is that you get more of a middle ground measurement. And this is used widely by the central banks as they formulate their policies. The latest trimmed mean report in Canada shows 2.7%. So that's obviously higher than that 1.9% headline inflation. The latest trimmed median is also higher. That came in at 2.6% for the second straight month. Now, when I look ahead to 2025, according to a BDC economic report, the outlook for 2025, they're saying that inflation is expected to stay within the Bank of Canada's 2% target range for next year. But, and there's always a but here, we've got a weaker Canadian dollar that we have to worry about. It has been a very tough year for the loonie versus the US dollar. And with that weaker Canadian dollar, it makes imports from the US and other places around the world more expensive. That could push prices up. Also, if we see the housing market start to heat up again, we could see inflation taking hold there. So for now, most Canadians should actually start to feel like the dollar goes a little bit further. The big question is, how long can we keep inflation at this low before something might throw us off track? Now, I want to move to jobs, and an understatement of this video is 2024 was not a great year for the job market. We saw unemployment climb to 6.8% by the end of the year. We saw hiring slowing down as businesses became more cautious, and the population grew faster than the number of jobs. A lot of people, especially the younger workers and immigrants, they struggled to find work, especially in the latter part of the year. Look right now at the youth unemployment rate. It finished the year just under 14%, so that's not good for anybody. Now, as I've looked at sources over the past couple of weeks, I don't see a much brighter picture for 2025, but there are a couple of things that might take shape. First off, some of the things we should watch for are the government is planning to reduce the immigration targets. That could ease some of the pressure on the job market. And then on top of that, we've seen wages have actually been growing faster than inflation recently, and that should give workers a little bit of a boost there. We've seen a pretty steady rise in the average hourly wage. We've seen the weekly earnings reports. They've looked pretty good as well throughout the year. A big catch here, though, is that slowing population growth could leave some industries struggling to find workers to even fill positions in those areas. So as I mentioned, youth unemployment, that's sort of the big issue on my mind right now. Without better training, new job opportunities, a lot of that contingent could have a rough time in 2025. Bottom line is it could be another challenging year. I think it will be for job seekers. If wages keep rising, at least there's going to be a little bit more money for those who are actually employed right now. Now, I want to move on to interest rates. But before I do that, I would like to take one more opportunity this year to say thank you to Harvest ETFs, who did partner with us throughout the year to support our channel. I want to introduce the Harvest High Income Shares ETFs. This gives you access to some of the largest U.S. companies through single stock ETFs with the added benefit of high monthly income. So if you are looking for greater monthly income, you might want to consider this enhanced series that also utilizes a modest leverage, approximately 25%, to give you you some extra income there. Now, the highlights of this, these are stocks that you know, Amazon, Microsoft, Nvidia, Eli Lilly. You can invest in leading businesses that have strong growth potential. You also enjoy tax-efficient cash distributions that is supported by a covered call program. Other benefits are that they are Canadian trust units. You can get tax-efficient income, and they're available in both CAD and USD. So you can visit harvestetfs.com to learn how the Harvest High Income Shares ETFs can help you achieve your financial goals. Now, on to interest rates. These are finally coming down. We've seen a couple of years of pretty relentless rate hikes, and the Bank of Canada has finally switched gears. They did that starting back in June of this past year. They started cutting rates. They dropped from 5% down to 3.25% by December, and they finished with 2 oversized cuts of 50 basis points each to end the year. So we did see some relief for borrowers, but there's still a lot of lingering damage from the earlier hikes. It's still being felt across the country. For the most part, a lot of households were stretched pretty thin, just trying to keep up with the increased debt payments that they saw from that rate hike cycle. Now, if we look to 2025, I could just sort of summarize this by saying, let's get ready for some more rate cuts. The Bank of Canada, they are expected to lower rates even further. Predictions that they're going to land somewhere by around 2% by the end of 2025, that at least according to a report by RBC Economics. And that is obviously good news for anyone who has particularly a variable rate mortgage or anybody looking to take out new loans. But there's one thing that we have to keep in mind here. Lower rates don't just work overnight. They're not magical, and it could take until late 2025 before households and businesses really start feeling the benefits from those cuts. I'll also mention that while cheaper borrowing is great for things like buying homes, etc., there is a risk that it could push demand up too much, and we could see another spike in housing prices. That's something probably not a lot of people want to see en masse there. It's a tricky balancing act. I always think of this. I always think of the balancing act that it has to be played out here. We want the lower rates to boost the economy, but we could also see new problems. We could see a spike in new problems if we're not careful with that. Now, GDP. Canada's economy struggled in 2024. There's no way about it. We did see positive growth, but it was certainly nothing to write home about. If we look at it from a per capita perspective, GDP actually started to shrink. Now, again, we can look at the high interest rates that affected both consumer spending, business investment. That's part of the problem here. If I had to summarize the year, the economy was growing, but it wasn't growing fast enough to keep pace with all of the people that we saw added to the workforce. 2025 outlook, the forecast is basically for more of the same. GDP growth is expected to hit 1.2% by the fourth quarter of this year. That's, again, according to an RBC Economics report. When we see lower interest rates, that should help households spend more. We might see more life returning to that real estate market. But the immigration cuts that are scheduled here, it could definitely slow down some of the economies, or one of the economy's biggest growth drivers. So yeah, the economy is moving in the right direction. It's not exactly taking off like a rocket. Last thing I want to cover off in detail here today is something that's still hanging over us. These are trade tensions. And in about 3 weeks from now, Donald Trump will be back in power. So are the trade worries that come along with his administration. We've probably heard by now he's floated this idea of a 25% tariff on Canadian goods. Now, the jury's still out on his motivation for this, but if that does in fact happen, I think we have to prepare for it. No doubt it will have an economic effect on our economy. And there's also talk about renegotiation of the trade deal, the USMCA, that isn't helping matters at all there either. Now, back to the tariffs. If the tariffs do get slapped on Canadian goods, it will hurt. It'll seriously hurt some industries, and I think of manufacturing, I think of agriculture as sectors that will suffer there. Then the possibility that Canada might actually retaliate with our own tariffs, things could get pretty messy pretty fast on that. So for now, a lot of businesses are kind of in a wait and see mode. The policymakers too, they're stuck sort of trying to find this balance between standing their ground and standing tough against the U.S. and keeping trade flowing smoothly. So that's kind of where we're at right now. We see inflation down. We see a weaker job market. Interest rates are falling, but then there's that trade tension wild card that will probably take a number of months to play out here. When I look overall at 2025, I think it'll be a year, I'm going to say, of cautious optimism. There are some bright sides there, but there are also some key risks that we want to keep an eye on as well. So I'll end the year now, last video of the year, and ask you for your take. So what do you think? For you, will 2025 be better or worse? And for Canada in general, what are your thoughts there? Drop those thoughts in the comments below. And I don't say this often, but don't forget to like the video if you in fact like what we put out here, and subscribe for more updates. We'll be back throughout the year with this type of regular update. So I'll finish things off by saying Happy New Year to all of you. See you next year.